Welcome to Illuminati Silver. We tell you the truth about silver. Today, we're diving into one of the most fascinating, yet lesser known stories in the world of precious metals. Platinum. Once valued even higher than gold, platinum today stands at around $1,000 an ounce, having risen only 8% over the last 12 months. This pales in comparison to gold's 38% rise, which puts it at nearly $2,736, and silver's impressive 41% jump. Why has platinum lagged so far behind its fellow metals? And is there a chance it could regain its former glory? We'll explore the historical journey of platinum, its unique characteristics, and what factors might drive or limit its future potential. Platinum's historical prestige. Let's start with a look back. Historically, platinum was known as the rich man's gold. This is because platinum's rarity, combined with its high melting point and complex extraction process, made it significantly more expensive than gold. The luxury industry quickly adopted platinum for high-end jewelry and even currency in some cases. It became a symbol of wealth and exclusivity, often seen as the ultimate sign of sophistication in items from watches to wedding rings. In fact, platinum's reputation was so strong that for many years it was considered a safe, stable investment, much like gold. However, white gold has stayed resilient as an economic hedge. Platinum's journey diverged, becoming more reliant on industrial demand, especially in the automotive sector. This shift marked the beginning of platinum's divergence from gold in terms of price and perception among investors. Industrial dependency and lagging price growth. Now let's examine what makes platinum different from gold and silver in practical terms. Platinum's price is heavily influenced by its industrial use, particularly in the automotive industry for catalytic converters, which reduce emissions in combustion engine vehicles. As many automakers shifted to palladium, a metal that can serve similar purposes but is often cheaper, demand for platinum decreased. Additionally, the rise of electric vehicles, which do not require catalytic converters, has further diminished platinum's role in the auto industry. This, in turn, puts downward pressure on its price. In contrast, gold and silver have multiple demand drivers. Gold is primarily seen as a store of value, a hedge against inflation, and a safe haven during uncertain times, which has been especially true in recent years. Silver also shares these qualities, but is unique in its broad industrial applications, including in electronics and solar energy. While platinum has industrial demand, it lacks the investment-driven demand that gold and silver enjoy, contributing to its relative underperformance in recent years. Comparing platinum's appeal to gold and silver. When we compare platinum to gold and silver from an investor's standpoint, some key differences emerge. Gold is seen as the ultimate store of wealth. It's held by central banks around the world and is known for maintaining its value over centuries. Gold is scarce but also widely distributed, giving it global recognition and liquidity that platinum simply doesn't match. Silver, though less valuable per ounce, has what we might call a dual personality in terms of demand. Like gold, it's seen as a safe haven investment, but it also has substantial industrial use, especially in emerging technologies. These dual sources of demand mean that silver can perform well during economic downturns, but also as economies recover, driving industrial demand higher. Platinum, on the other hand, has more niche industrial applications, and its demand can be volatile. For example, while platinum is essential in some industrial uses like medical devices and laboratory equipment, these sectors don't produce the same level of demand as sectors using gold or silver. Platinum's industrial reliance, especially in the automotive sector, makes it less attractive to those looking for a long-term hedge against economic instability. Essentially, platinum's niche usage has limited its potential to be seen as an all-purpose investment metal. Environmental and technological shifts impacting platinum. Another factor affecting platinum's prospects is the shift towards cleaner and greener technology. Unlike gold or silver, platinum is tied closely to certain environmental and technological trends. The metal is essential in hydrogen fuel cells, which hold potential as a green energy source, particularly in heavy transportation and backup power applications. This could bode well for platinum's demand if hydrogen technology gains traction, potentially creating a whole new demand stream. However, hydrogen energy adoption is still in its early stages and is not yet widely integrated. Meanwhile, platinum's demand has suffered due to regulations driving down the use of fossil fuels and consequently the demand for catalytic converters. In recent years, investors have favoured metals that benefit from established green technologies like silver, which is widely used in solar panels. While platinum could see benefits from the hydrogen sector, it will take time and continued technological advancement before we see these benefits reflected in its price. Can platinum close the price gap with gold? With gold nearly 3 times more expensive than platinum, some investors wonder if platinum can ever make up this price gap. It's certainly possible, but for platinum to close the gap with gold, a few key conditions would have to change. First, the demand for platinum in industrial applications, particularly in the green energy space, would need to rise substantially. The metal's potential role in hydrogen fuel cells could become a significant factor, but as we mentioned, that's still largely theoretical. Additionally, platinum would need a shift in perception. Currently, it isn't seen as the safe haven that gold is. This would require more widespread adoption of platinum as a stable store of value, which could happen if central banks, for instance, began to diversify with platinum holdings. However, this is a long-term scenario and would likely require considerable market and cultural shifts. In contrast, gold's safe haven status means it attracts investment during times of economic or geopolitical uncertainty, often driving up its price regardless of industrial demand. Platinum simply doesn't have this level of investor confidence yet, though if demand factors align, it could see a substantial boost. Conclusion. Platinum may lag behind gold and silver right now, but it's far from irrelevant. Its unique industrial uses, especially in emerging green technologies, offer it potential for growth that few other metals have. Investors who believe in the long-term promise of hydrogen or are looking to diversify may find platinum to be a worthy addition to their portfolio. While platinum may not be the all-weather investment that gold and silver represent, its potential for future demand in clean energy means it's definitely worth keeping an eye on. Thank you for watching. Please don't forget to like, subscribe, and let us know your thoughts on platinum's future prospects in the comments below. Before you go, if you haven't done so, please also pop on over to our sister channel Finances Do Matter and make sure you subscribe there. We've placed links to this channel also in the description box and comment section. Thank you once again. Make sure you stay tuned as we have a lot more videos very similar to this coming up in the days and weeks ahead.